Half an hour away from the Opens in Hong Kong, Shenzhen, and Shanghai. You're watching The China Show. I'm Yvonne Man with David Ingles.
Let's get to your top stories today. South Korean assets getting a boost from Jae-Myung's election as president, with voters seeking change after months of political chaos. The Kospi index is on track to enter a bull market.
Trade tensions still simmering, though, as the U.S. warns China it has a choice to make on global cooperation. President Trump, meanwhile, signing the order to hike steel and aluminum tariffs to 50%.
Plus, we take a closer look at China's challenge to U.S. dominance in humanoid robots as startups harness AI to make their moves. Good morning. Welcome to the show. The midweek session is upon us. 30 minutes to the opening bell. Live TV, folks. I actually wrote that graphic, bottom of your screens, a couple of minutes before we came on air. So that's actually quite dated right now because of the sort of revival we've seen in the last, thank you so much for changing that, in the last couple of minutes or so in the Kospi benchmark. So we opened higher, and we were expecting it to open higher to begin with, but certainly we've accelerated the gains on the Kospi benchmark. So what's happened there, and the open we're seeing in Taiwan is leading to that. And the other one, of course, there at the bottom earlier on was being dated as well. Right, in terms of risk appetite right now, so that's clear going into the open today. The dollar, again, on weaker footing. Gold is on offer, and as you can see, the 10-year yield coming off, of course, a surprisingly decent, not blockbuster, auction yesterday. We have 7-year bonds, speaking of auctions here, in the CGB market today. Right. Very, very quickly, China overnight, well, a couple of things. BYD actually one stock to watch going into the open today because of the big pop that we had in the overnight session. It's worth pointing out that in Hong Kong, of course, we did see a bounce back above the key moving averages on the listing here in Hong Kong. We're looking, broadly speaking, at automakers, of course. NIO out with some earnings. It's looking to make cost reductions to maybe bring forward, or in light at least of the break-even target. Golden Dragon Index up overnight 0.5%. Is that translating as we flip the page into futures right now, going into the open today? And we are seeing somewhat of a decent one, let's put it that way. Right, Hong Kong dollar, we've seen this, and again, every day so far we've seen this inching closer to the weak end of the trading band. 785, of course, is the level we're tracking there. Dollar China, nothing much to tell you about there as far as that's concerned. But yeah, broadly speaking, it's quiet on Chinese markets. We'll give you an update or some minor updates on the trade conversations taking place. Rare earths, of course, is a big one to tell you about. But apart from that, our top story really is, and as we were pointing out, in South Korea today.
Yep, and we're watching that bull market sort of territory here when it comes to the Kospi, certainly on the back of this news, right? So let's get to our top story now. South Korea's new president, Jae-Myung, is set to be sworn in the next hour. He claimed victory, pledging to do everything he can to revive economic momentum and improve people's livelihoods.
정치가 이해관계 때문에
While politicians may clash over interests and draw lines between factions, the people are not bound to follow those divisions. People are the master of this nation, and politicians are workers who are responsible for people's lives. Political quarrels may not be avoidable, but the people don't have to be divided and hate each other.
But his victory speech did not mention how he plans to handle relations with Washington. Let's get to our Bloomberg anchor, Sherry An, joins us now live from our Seoul studio here this morning. And Sherry, just keep us up to date really on what's next here. I mean, is there really going to be a call between the new president and President Trump?
That's what we're hearing from local media, Yonhap, saying that there could be a call directly with President Trump later on Wednesday. Of course, we have been watching some comments coming from the Secretary of State, Marco Rubio, already in the U.S., congratulating Jae-Myung on his election victory, saying that he wants to deepen the cooperation with South Korea. We've also heard from Prime Minister Shigeru Ishiba of Japan as well, saying that he wants to really energize the relationship with Seoul. Of course, given the left-leaning tendencies of progressive President Jae-Myung, we could see a change in foreign policy when it comes to how South Korea deals with both the United States and Japan.
Yeah, and Sherry, I think at the end of it, it did end up looking much tighter than I guess most had expected it to be. What does this tell us about how divided South Korea is after really what we were hoping to be, and maybe still is, the book ending this political turmoil of 6 months.
Yeah, after really the ongoing political turmoil, we had seen a very divided South Korea, especially after the ouster of President Yoon Suk-yeol, officially removed by the Constitutional Court that upheld his impeachment back in April. What was surprising was that we were expecting this rebuke against the ruling conservatives. We did see that, but at the same time, minor party leader Lee Jun-suk, for example, got more than 8% of the vote. So if you combine that with the leading conservative candidate Kim Moon-soo, we would have seen that potentially outweigh the support that Lee Jae-Myung got. So we continue to see deep political divisions here. We have seen 3 acting presidents already. Yoon supporters actually grew larger over the past few months. President Lee Jae-myung will have to try to speak to the whole nation. He's talked about wanting to unite South Korea. His support levels are weaker among younger South Korean men in their 20s and 30s. There's a big generational gap as well. Some of those economic policies that he needs to follow are addressing some of those concerns from the young generation, including those housing plans as well.
And Sherry, we're seeing markets really liking this announcement and this election outcome in some ways. We're eyeing a bull market in the Kospi here right now. It seems like that political risk is being shaved off the table for investors. Is there further upside now?
Yeah, we were expecting to perhaps see some more optimism on the Korean markets, given, of course, the stimulus package measures the candidates have promised. President Lee Jae-myung actually talked about a stimulus package worth more than 35 trillion won. That's around 25 billion US dollars. So what that extra spending could mean for the economy, that could mean a huge boost for the Kospi as well. Right now, if we close at these levels, we could see the South Korea market enter a bull market up more than 20% from early April. But it's not just the fact that we are going to get potentially those short term measures when it comes to stimulus, but also the fact that Lee Jae-myung has talked about improving corporate governance reforms. He's actually talked about wanting the Kospi to double to 5,000 during his term. He's talked about protecting minority shareholders. We know that we have seen wider breadth now in the rally here in South Korea, just beyond semiconductor heavyweights. For example, if you take a look at Samsung alone, now it accounts for about 16% weighting in the Kospi, down from more than 20% just a year ago. So will we see some of these sectors more supported given some of those long-term measures that this new administration wants to implement here in South Korea is a key question. We'll be watching some specific sectors like renewables, for example. President Lee Jae-myung has talked about wanting to increase renewables here in South Korea, the nuclear sector as well, less support for the nuclear sector than his predecessor when it comes to Lee Jae-myung. We'll also be watching some of those Korean defense stocks. Of course, we continue to talk about the geopolitical backdrop as well. North Korea is a key issue for Lee Jae-myung. He wants to engage in dialogue. It might be a little bit more challenging given, of course, Pyongyang's deepening relationship with Russia.
Sherry, fantastic. Thank you so much. Sherry, on our co-anchor, of course, in Seoul for us at live coverage there of the elections and the market reaction so far that we've seen, poised to enter a bull market, the Kospi Index. In fact, let's get more context on Korea and other market themes today. Let's bring in Paul Dobson, our executive editor for Asian markets. Paul, good morning. We're looking at a K-pop today. How is your team looking at the rally in Korea today? And I guess the sustainability a factor as well moving forward here.
Yeah, good morning, David. So I think Sherry summed it up very nicely on the equities side. There are reasons to be optimistic, not least the government's stance towards the market itself and being minded to be supported. But I think, pay attention to the bonds as well. Don't just think about the equities. If they're planning a lot more spending, will the market be willing to fund extra deficit spending like that? We have a story out that's describing Lee as an outspoken South Korean leftist. Nothing says sell bonds more than that when you're reading headlines. So a little bit of risk out there. On the flip side, inflation is coming down, and that does give the BOK room to keep on lowering interest rates, so that may be bond supported. But keep an eye on fixed income, because although you might have stimulative measures that the equities market would really like, don't get too carried away until the bond market gives the all clear, the green light to go ahead with those spending plans.
Yeah, and I think just what's been going on broadly speaking, Paul, is this kind of surprise in the job data that we got in the U.S., right, with job openings rising, maybe suggesting the labor market is still quite resilient in the face of a trade war. What does that lead to for the U.S. jobs report on Friday, and what does it mean for markets?
Yeah, so the markets took it as a positive that there was, still health in the U.S. labour market after we'd had some sort of ambivalent reports on that recently. The Federal Reserve policymakers in general have been telling us they're pretty comfortable on both sides of the mandate at the moment, that the labour market is proving robust and that inflation is slowly coming lower, depending exactly on what we see from the tariffs over the coming months as well. So the market took that as a positive, and if that were reinforced in the payrolls data on Friday, then maybe that would back it up as well. But it does tell you that the Fed is going to be on hold for longer, not planning to move anytime soon to start lowering interest rates, although they're talking about could do 2 more cuts this year. Doesn't seem like that's coming particularly soon, and so that will again be a factor that in the bond side keeps yields elevated, even if the equities market is continuing to see the positives there.
Paul, thank you. Paul Dobson there, our executive editor for Asia Markets, joining us live from Singapore. We're going to have more on the Korea elections later with the Center for Strategic and International Studies, and Sydney Seiler joining us later on.
But ahead of that, we'll be talking rare earths, specifically here with China's domination and dominance here in the industry, and really how it impacts supply chains and what the talking points really are on the ground in the U.S. as they look perhaps at that sort of trump card, no pun intended there, on the part of the Chinese. Those interviews are coming up here on the China Show, counting down to the open of trade in Shanghai and Shenzhen and here in Hong Kong. Good morning. You're watching the China Show. Good morning. Welcome back. You're watching the China Show. So we've coalesced as far as growth projections are concerned. So we've heard from the IMF, I think it was, early June. So mid to late April, the latest forecast is 2.8. The current consensus from private economists in the global economy growth this year is 2.7. The OECD, in case you missed it, around late afternoon Asia time yesterday, came out with their latest forecast at about 2.9%. So all things equal, we're looking, if they're all correct, the slowest pace of global growth in the last, let's call it this century, 20 years, outside of sort of crisis years of the pandemic and the global financial crisis. So in many ways, this is really we're looking at a very subdued picture here for the global economy. Let's bring in Moritz Kraemer, Chief Economist and Head of Research at LBBW Bank, joining us out of Singapore today. Moritz, good morning, and thank you for taking the time to speak with us. 2.9% seems to be a low number, but you even think this might be on the higher end of things.
Yeah, good morning, David. Yes, I do indeed think that the 2.9, probably there's some element of hope included. We cannot overestimate it, how damaging the whole tariff discussion is, because what it does, it creates massive uncertainty and it creates incentives for corporates to withhold investment because the rules of the games are so unclear and changing all the time. And of course, consumer confidence has been going down, especially in the US. So I would think probably the 2.9 that the OECD released yesterday is probably at the top end. If you force me to call a number, I would say it's 2.6 both this year and next. And as you said, this is very low, and this is not a shock like a pandemic or a financial crisis that hits us from the outside. This is entirely man-made, and it's a man-made shock by one man alone, and he's called Donald Trump.
And what assumptions are you making now in terms of tariffs? Most positive outcome, most pessimistic, Moritz?
Well, let's say what does optimistic outcome even mean? Even in a good outcome, I would expect that the average tax rate of the United States on imports from all over the world would be in the range above 10%. And this is higher than it has been probably in a century. So this is a huge shock. We don't have to go to the 145% on China. This is tantamount to an embargo on imports from China, but even sort of what we by now consider an optimistic outcome. 3 months ago, we would have thought that's a terrible outcome. And we are just sort of being inoculated by all these statements by Donald Trump that we think this is actually a good outcome. No, it's not. It's still a bad outcome. And it will take some time until supply chains and corporate strategies adjust to that. And while that takes place, we will see lower growth.
Well, speaking of growth, what do you think is the best case scenario for the U.S. economy this year? Talk to us about the numbers there.
Yeah, well, our base case would be that the U.S. economy grows by about 1%. So we're not seeing the shocks yet in terms of how the tariffs will impact the labor market, for example, how it will impact inflation. But this is just deferred. We know, and even though this is sort of negated by Donald Trump and some of his advisors, this will create inflation. And if you look at the consumers' expectations, both in terms of consumer confidence but also inflation expectations, they're at a multi-year high. So they know what's coming, and that's probably going to suppress their willingness to open their wallets and spend as they usually do, because you underestimate the power of the U.S. consumer at your own peril. So it's investment, it's trade, but probably also consumption that will dampen growth going forward. The best outcome would be, Donald Trump turning around saying, well, I didn't mean it. It was just an attempt, and we go back to globalization, but I assign to this a near zero probability. So yes, there will be a reduction in growth in the U.S., and that will be one of the main drivers of keeping global GDP growth at bay.
Moritz, I see in your notes that you think if China grows by 4%, it will be lucky. We haven't seen the data so far, right? You take a look at what we're seeing in exports, and it seems like for now, China's been able to offset the U.S. tariff impact by, shipping its excess capacity to other parts of EM, to Europe, for example. Do you think that can be sustainable then?
I think it's partially sustainable. I mean, it's clearly what's going on is that there is a deviation of trade through third countries as well, and especially Southeast Asia has been taking on lots of Chinese exports, but the second largest market really is the EU. And there are lots of discussions in the EU, understandably so, if the US becomes harder to penetrate for Chinese exporters, and China does depend on exports because the domestic demand and domestic economy is still somewhat weak. Will Europe be willing to absorb all of those Chinese exports that would have previously gone to America? And I think that's unlikely. There will have to be some conversations about that. But on the positive side, the government in Beijing is doing everything they can in terms of propping up fiscally the economy. I also expect that the PBOC will have another cut in the wings. So on the policy side, there's a lot of support. And maybe the decisive factor might be what the consumer is going to do, because I would anticipate that in the next 2 or 3 quarters, so we'll see a bottoming out of the housing crisis, and this might just bolster the confidence of the Chinese consumer, and that would definitely help. And then we might actually see it, maybe above 4% growth this year. But for now, I'm sticking to the 4%.
Moritz, if I didn't have context and I simply say, a Martian friend visited Earth and I was like, here are the bond yields on Earth, I wouldn't get a sense that we are headed for a slowdown. I mean, U.S. rates, the 10-year yield 4.5%, German Bund yields 2.5%, still elevated. Chinese yields, to your point, are on the way down. Do we need to see will we see lower yields? Let me rephrase that globally. And will we see closer convergence towards China's yields right now?
Well, this time is a little different, right? Because if you have a slowdown, normally what you would expect is that you see central banks cutting rates. I don't see the Fed cutting rates this year because missing the inflation target will be more severe than the miss on the full employment target. So what comes on top of it, for the first time that I can remember at least, and probably any of us alive, the US dollar is being questioned as the world reserve currency. There's grave concern about what the government will do. For example, in the new Big Beautiful Bill, as it's called, we have a Section 899 which might target foreign investors of countries where the US administration doesn't like the policy. So this might just lead to a stampede out of the US dollar assets and the Treasury in particular. This will keep up the rate. So we have a huge supply of government bonds coming up, not only in the US, but also in Europe and China. And globally, the savings rate is probably, for demographic reasons, somewhat on the decline. We have more home buyers. So all of this really conspires against lower rates.
Moritz, I have to mention, I mean, back in the day, back in 2011, you were part of that team in S&P that did downgrade the U.S. I mean, it's 14 years ago, but what's different now? And do you think the U.S. is at risk of another downgrade?
I thought you might bring that up. Yes, indeed, it's different now. It's actually much worse than what we looked at in 2011, and on all fronts. It's certainly much worse on the fiscal side. We have basically, since the times of Bill Clinton, we had administrations which were pretty irresponsible with the budget, and that's why we have now a deficit of 6% of GDP, or above actually, at full employment in peacetime. This is not sustainable. And of course, what the government is trying to do now is to add further tax cuts and make the situation worse. What also has changed since 2011 is the quality of governance and policy making, which, I mean, we talked about this earlier, and you talk about this every day on the show. It is just very haphazard, and the checks and balances are being weakened every day. And of course, the last shoe to drop might be monetary policy independence. For now, there seems to be some sort of truce between the Fed and the White House. But, you know, by this time next year, we'll have a new chairman. We don't know who that's going to be, what he's or she's going to say. So there are lots of downside risks, and I'm just sort of perplexed that we have all ratings on a stable outlook right now on the U.S. Do I expect a downgrade anytime soon? I do not. I think this is a decision that the rating agencies want to think long and hard about, just because of the political backlash that this might attract.
Moritz, it's great to have you in the region. Thank you so much. Moritz Kraemer there, Chief Economist and Head of Research at LBBW Bank. We got futures pointing a little bit to, well, pre-market pretty flat here right now. Futures are slightly to the upside here. We got plenty more ahead. This is Bloomberg.
Right. The approach to the open, nothing much happening, so we won't spend too much time on it. There we go. The open is next.
Welcome back. You're watching the China Show. As we prefaced, it's a bit quiet out there here right now. 50 futures are not doing too much. The currency is not doing a whole lot, but we are still holding at that strength of 7.18 against the dollar, and the Hang saying that, there you go, a bit of a snooze fest here this morning, but we're inching closer to that 24,000 level for the HSI. But then again, you know, we're still waiting for maybe a potential call between Presidents Trump and Xi. Maybe that's what the market is hanging on and waiting for here until we get any more sort of clarity. That jobs report in the U.S., or at least that's coming out on Friday, but what we saw in the job openings, that certainly was encouraging, at least for those stock bulls out there, at least for now.
I forgot it's jobs week.
Yeah.
Okay. So that's that. Other things that are interesting. Oh, 49 on Hong Kong PMI. That came out about an hour back. And in case that hasn't excited you just yet, there's also a 7-year CGB auction today taking place. So stay tuned for those things. And if you don't think that's exciting, we're coming off a 10-year JGB auction, which was actually on the more exciting side of things. But yeah, there's the open for you.
Yeah,
Go, Yvonne.
The boards say itself.
Go, Yvonne.
Iron ore, that's one to watch, right? We saw that divergence between iron ore and copper, right? Where iron ore is heading into those, you said that 2-year lows, was it? Or
2-month lows, yeah.
Sorry.
It's been hovering towards the low end of the recent range.
Yeah, and that was on the back
out.
of the bad data that we got yesterday in terms of the Caixin PMI numbers. But we're seeing a little bit of recovery in the Dalian futures here this morning. Consumer stocks like Medea Group are doing okay. CATL is doing quite well. Yeah, not a whole lot to tell you in terms of direction, but it's slightly to the upside here today. Keep in mind, though, we are watching the 30-year CGB yield that's still down about 1 basis points today. Hong Kong's doing this here. So we mentioned the PMI numbers. They didn't look too pretty. And you take a look at the Hang Seng, we're pretty much flat. HS Tech is slightly to the downside here. And we're watching very much the likes of EV stocks in particular. NIO just came out with some earnings, and they did pretty well in the ADRs, just given the fact that they're going to be cutting their R&D costs to hit their break-even goal. The stock is slightly up about close to 0.75%. China travel stocks also in focus here today. So we had the holiday spending data. Didn't look too good, right? So we saw that it shrunk as we start to see that consumer sentiment is quite weak. So some of the travel-related stocks like Trip.com, that's down some 3%. Air China also down 1%. But it's a mixed picture across some of these airlines this morning. And Chinese data stocks, this is an interesting one as well that we are focusing on this morning. So there's new rules requiring governments to use national big data system as well. So you are seeing some movement in some of these stocks here today.
Look at how Yvonne is continuing to wake us up with some interesting news.
Hey.
There we go.
Should I start dancing?
Well, you might not need to, because we're going to obsess
Aussie
now.
GDP number.
Yeah, really
Blow
big,
your mind.
backward-looking data here. My understanding is this is really coming in on the lower side of things, so much so that I believe our folks in our news bureau in Sydney are letting out a bit of a gasp here. So let me get the data for you. Okay, so 1.3%. That's first quarter. That's year on year. That's seasonally adjusted. In terms of where that actually is in the so on the estimates front, it's missed that. It's actually missed almost every single one on that bell curve. So it's coming in nearest the lowest end of the forecasted range. Lowest forecast was at 1.2%. So this one really coming in low. We are still seeing a swing, as you can see on the screens, on the Aussie dollar. The 3-year bond yield, which is, I guess, one of the most indicative of future policy here, is down about 4.5. We're down about 4 right now on the Aussie 3-year yield. Nothing much as far as other market reaction is concerned, though.
Yeah, let's get back to the trade discussions and where we are right now, where we did hear from U.S. Treasury Secretary Scott Bessent has taken aim at China's economic imbalances in a video speech to a conference in Switzerland. Now, that's where the U.S. and China hammered out a fragile trade truce last month. And let's bring in our chief North Asia correspondent, Stephen Ingles, in Hong Kong. So things have been pretty shaky.
Yeah.
We hear what the U.S. is saying, right? It's a pretty similar narrative on China as we wait for a potential call.
Yeah, I'm getting a sense from you. You guys think it's a slow news day, right?
Yeah.
And so I look at these comments from Scott Bessent and I say, okay, this is a slow news day, because they're kind of bringing out some of the common narratives that we heard through the Biden administration and now into the Trump administration. That is, China needs to get its economic problems resolved, and that means stop exporting deflation, stop exporting your excess industrial capacity, boost domestic consumption. And he also, Scott Bessent, says they, meaning China, are in the midst of a large real estate, and he was cautious to not call it a crisis. He didn't want to be alarmist, but he says a large real estate overbuild, and the way for them to stabilize their economy is not to export deflation and excess products to the rest of the world. He says, got to boost fiscal stimulus, you got to stop over manufacturing and boost the consumer economy. So nothing really new to chew on there. It's sort of a pause right now until, as you rightfully said, guys, we get some sort of call and conversation between the top two guys, Trump and Xi Jinping, to kind of bring the temperature down, because weeks have passed now since that truce in Geneva, and that was obviously some big momentum where the Trump administration dropped its tariffs down from 145 to essentially 30. But again, we don't know where we are right now. China did drop it to 10, but that deadline for resumption is fast approaching next month. So again, the temperature is down. There's not a lot to chew on because nobody's really saying anything until we get that call. Distrust runs deep between these two countries right now, obviously.
It might help. So while we don't have that meeting, it might help that the new ambassador to Beijing, David Perdue, we understand met with Wang
Sure.
Yi. What do we know took place in that meeting?
Well, that is a standard procedure where the new ambassador goes to the foreign ministry and basically offers up his credentials. And that's what I'm sure this meeting was about. But sometimes China, if they're dissatisfied with a trade partner or with another country, they'll let them stew a little bit. David Perdue arrived in Beijing a few weeks ago. There have been cases where they let them sit and wait for that meeting for quite some time. This time we're getting a readout from Chinese state media as well as a social media post from David Perdue essentially saying that he did meet with Wang Yi, the top diplomat in China, the foreign minister, obviously considered to be quite a hawk on the trade front and geopolitical front from China. Wang, according to state media in China, says U.S.-China ties are at an important and critical juncture and says Washington's recent negative measures hurt China's interests. He urged the United States to create a necessary condition for bilateral ties to get onto the right track. Again, this is similar kind of narrative coming from China. Nothing really new to chew on there. But again, it basically confirms David Perdue is there, the top man from Washington in Beijing. We'll have to see what kind of take or stance he takes with Beijing, obviously, as he carries out Trump's trade policies.
Steve, thank you. Stephen Engel, our chief North Asia correspondent. There's some breaking news coming through here. This concerns Garuda Indonesia, of course, the airline, the big airline in Indonesia. Sources have told our reporters here that the airline is in talks with the Sovereign Wealth Fund in Indonesia, Danantara, of course, an injection of around $500 million. And an agreement is the operative word, could be reached as soon as this or next month. It would be part of an initial stage of funding, of course, that may be done in two parts to help, of course, this struggling carrier to effectively make right its finances so far. That's what we've seen here so far, Yvonne.
Yep. We're just going to recap some of the GDP numbers that we got from Australia. So it was a miss quarter-on-quarter and year-on-year numbers, right? 1.3% year-on-year, just 0.2% for the quarter. But yet you're seeing quite a bit of a reaction in markets, right? So basically, the Aussie dollar has turned around.
Yeah.
And three-year yields extending that decline. And also the ASX 200 is extending the gains now as well. Maybe this might mean that they might have to cut rates further.
Well, yeah, they opened up the door for 50, right, in the last meeting, right? So bad news in the economy, perhaps good news here. We're back to that, aren't we? Bad news is good news. Okay, we'll leave it there for now. The other story we're tracking here, so we're right at about the tail end, in fact, almost at the very tail end here of earnings season. NIO was out with earnings. I think we're going to show the stock and how it's doing very shortly on your screens. Yeah, I think that's the headline you need to know here. The company's looking to reduce its R&D costs by quite a big percentage here in light of the break-even targets that they've set here for the fourth quarter. In fact, the company outlined then the plan after the 1Q sales coming in lower than estimates despite higher volumes as far as... ADR, we have the stock trading right now in Hong Kong. Let's get it up, please, if we can. Let's bring in Rachel Yeo for more on this. Rachel, put this into context for us. There's a headline on cost reductions, but this, the context from the company is really more under positive light here. Just make this make sense for us.
Yeah, so just based on last night's earnings call, Chairman Willem did say that they aim to reduce, research and development spending by as much as 25%. And he's also saying that, he's also hoping that these expenses may drop to between 2 billion yuan to 2.5 billion yuan per quarter. So NIO has done a number of cost control efforts previously, and he's also expecting the savings from that to materialize from the second quarter. So this also comes after first quarter revenue missed estimates despite them seeing higher deliveries, and also how the competition in the EV sector has been heating up with price cuts and whatnot. So the chairman did also say that the firm has been making improvements in restructuring its logistics and also streamlining its teams to enhance productivity. So we'll have to see how that will go in the next few quarters as well.
Rachel, you've been kind of looking through some of these earnings reports, what CEOs in China are saying about the potential threat from U.S. tariffs. It seems like they're kind of shrugging it or brushing it off for now.
Yeah, so just based on, analyzing a bunch of transcripts from earnings calls and other investor relations activities across various industries like tech and consumer firms, it does show that corporate China has since, gone out of its way to reassure investors on their ability to weather, tariff risks. And some of the reasons they have cited include learned experiences from Trump's first trade war, and also ultimately that their businesses are not that exposed to the US and are very domestically focused. And some of them have also shifted their supply chains or are accelerating to shift their supply chains in light of the uncertainty. So, for example, overseas revenue only accounts for close to 12% of the benchmark CSI 300 index, with the US only accounting for less than 2% of the CSI 300's total revenue. So this means that there's fundamentally very limited impact on A-share earnings. So the domestic recovery for China's economy is still more important for many of these Chinese firms. Even though, the sentiment has been more positive, there are also still lingering export risks. So although tariff risks have been reduced since then, they still have to deal with the relatively the baseline level of tariffs imposed on them, and companies do remain cautious with how the situation will develop as well, especially since now the situation is quite fluid, and also whether or not a trade deal can be observed after that 90-day truce concludes as well. So there is still a bit of uncertainty in there.
Rachel, thank you. Rachel Yo there joining us with the latest on all things earnings and NEO as well. Let's get to one stock in Japan that certainly is moving here this morning. We're talking about Toyota Industries. There you go. That plunge of close to 12% here right now. This is on news that its privatization proposal is facing some backlash and criticism from investors and analysts who are arguing that $33 billion deal undervalues the company. Let's bring in our senior auto analyst, Tetsuo Yoshida, joining us now. And certainly it seems like there's a bit of an uproar on the price. What's your take on this deal?
Actually, there are two angles for us to look at it. One is a privatization means giving the company, in this case Toyota Industries, more freedom, more flexibility. The company is shielded from the near-term pressure from the market or investors. But the other side is a governance issue. Going private means basically transparency will be less than before.
Is that a bad thing or a good thing?
Good and bad. The first one is obviously good, more flexibility in decision-making or management. That's a good part of the going private. But like I said, the company has a risk of being like a kind of black hole in the Toyota group. So all those bad things goes to the black hole. But investors as well as the analysts may not be able to see it.
All right. We're going to leave it there, though. Tetsuo, thank you so much for your analysis on that. Bloomberg Intelligence senior auto analyst Tetsuo Yoshida. As we speak, Toyota industry is still lower there. Toyota is still up close to 2%. We got plenty more ahead. This is Bloomberg.
Welcome back. You're watching the China Show. So context, right? So we are a couple of weeks into the 90-day truce, and how quickly things have appeared to have unraveled, right? Accusations late last week. You have the U.S. talking about how China's violated this and rare earths, and China's now saying, pointing to other things as well. And certainly as all this comes to, let's call it, as we try and bring things into the light, rare earth has really come into focus right now, and really what this plays, well, the role rare earth stories play in this negotiation. And I guess the insecurities on the side of the U.S. industries, and of course China knows that it dominates, of course, the sector. To make sense of this very complex story for us is Cory Combs, head of critical mineral and supply chain research at Trivium China. Cory, good morning from Hong Kong, and thanks for joining us. I mean, what exactly are we? Well, let's put it. What exactly are you hearing from your clients about what's going on right now?
Right. Well, thank you so much for having me. Right now, there's a lot of uncertainty over the degree to which Beijing did or did not agree to the removal of rare earth export controls entirely versus the streamlining of approvals to the United States, et cetera. So right now, there's a lot of confusion over the White House statements accusing China of reneging on its commitments under the Geneva agreements. In my view, there has been no evidence of such a reneging, but with these signals coming out of the White House, it raises the question for markets, what is the White House's position and what actions will it take as a result?
Yeah, how do you answer that question, right? It seems like Trump wants to relax these export controls. Beijing wants this, keep it as a major bargaining chip, right? So what's the most likely outcome in all this?
There are two ways to look at it. I believe that the one thing we can say for sure, in my opinion, is that Beijing in no terms intended to say that it will remove the requirements of applications for exports to the United States or any other country. These are dual-use goods that China added to its dual-use list. That's the way it works. And so from Beijing's perspective, when it agreed to roll back non-tariff barriers, what it agreed to not do was weaponize these controls and shadow ban exports to the United States. We believe that is fully Beijing's intention, and certainly its economic and political incentive to streamline approvals. However, those approvals are going to take several weeks to process. We have not had enough time to really see the evidence of the degree to which these exports are really being held up. So any claim of China holding things up is just premature. The process hasn't played out yet. On the US side, it seems clear now, but there was a sense that Beijing would completely remove the requirements of an approval, that the approval process would go away. That was not what Beijing seems to think it agreed to, and it is also not my reading of the Geneva statement. So that's the first thing. My optimistic take is that both sides can agree to give it more time without taking immediate action. The worst case right now is that Trump takes retaliatory action before the evidence is really in, and that China retaliates to that, what it will perceive as escalatory action. That is the worst case. I'm optimistic we can avoid that, but that's the situation we're in right now.
Yeah, I mean, Cory, the shocking truth that we're, looking at accusations without evidence. What do you think the data will show in a few weeks? If it takes a few weeks to streamline the process, what do you suspect the data will show in a couple of weeks?
I think we'll see two things. One, I think we'll see exports to the United States, to United States end users. I think we'll probably also see a slightly smaller exports volume than expected, than historically, because end users are worried about buying them. If you know this risk exists, your actual demand is actually decreasing. We've seen this with every single set of prior controls. So it is also important, if the data comes through and trade is slower than it was historically, that doesn't necessarily, we shouldn't jump to conclusions about that. The biggest thing I'm watching personally is, go ahead.
Go ahead.
The biggest thing I'm watching personally is actually the U.S. ability to import intermediate goods that contain Chinese rare earths, and these especially flow through Japan and Korea and South Korea. The U.S. imports more of these as embodied materials than they do directly. So that's really where the real threat is to mine.
Yeah, it's interesting, right? For magnets in particular, though, Cory, which sort of industries and companies do you think are most at risk and hurting the most, and how acute is that pain? And is it just U.S. companies that are vulnerable?
Great question. The two that are most top of mind for me are aviation and defense on one side and autos on the other. Now, the aviation defense industry, you're probably not going to hear about as much publicly, but basically the defense sector is incredibly exposed. These are magnets that are, especially the high-end magnets, the high-performance magnets, they're very difficult to produce, if at all possible to produce, without some form of Chinese minerals, especially dysprosium and these other magnetic elements, additives to, for example, neodymium magnets and the FeB magnets. So they're incredibly exposed, and they're not going to advertise this publicly, but this is the reality. The other side is autos, where we see the commercial side. They operate on a much more kind of last-minute import system, and so we see a lot of potential for those disruptions to apply very quickly. And we have seen auto companies be very public about the fears of disruption, especially anyone who's using a battery in electric vehicles. So on that note, Europe is especially concerned as well. Even though Europe is not a target for rejection of license applications, there's still a slowdown. As we mentioned, it just takes time. And MOFCOM officially, at Ministry of Commerce, officially has 45 days to review every application. So that is a potentially long period to wait. And in a very kind of, just-in-time kind of inventory system, that can lead to supply shocks very quickly. So we've seen the European automakers who produce a lot of electric vehicles. They were very, very concerned about the bottlenecks.
Cory, so that's a good point. So even if, let's say, to your point, if say the defense industry, even if they don't talk about the shortages and they're happening, what do you think we'll see? Are we going to see shortages of final products? Let's take autos, for example, because I think that's really more sort of on the ground that people understand. So even if, say, the automakers don't talk about it, will we see a shortage of certain parts in cars, what have you?
It could very easily happen. Now, I think right now, as long as the U.S. is able to procure intermediate goods from other producers, including Japan and South Korea among the most strategic, but there are others as well, as long as they are able to access Chinese minerals, produce those intermediate goods, and then sell those to the United States, there will be workarounds. The U.S. doesn't produce too many things in the commercial space that cannot be produced elsewhere. Just all of those have to use Chinese minerals effectively, or Chinese rare earths specifically. The bigger issue will be if there is an escalation from here. One of the serious downside scenarios would be if China tries to employ what we're referring to as long-arm jurisdiction. If this escalates to a point where China says, we don't want the U.S. to have these minerals, period, we will go after other countries. That would be a real shock, both to supply chains, but also to it would be a huge geopolitical escalation, not just between the U.S. and China, but dragging other countries into more into.
Cory, hold on a thought. We'll have more from Cory Combs there, head of critical mineral and supply chain research at Trivium China. We got plenty more ahead. This is Bloomberg. Good morning. Happening at the top of this hour, we are looking at live pictures out of South Korea right now where Lee Jae-Myung is being sworn in as the new president. And really, what's following months of chaos after Yoon Suk-yeol attempted to impose martial law. We're talking about really capping 6 months of political turmoil in this country. Markets are certainly afloat here. We're talking about bull market territory for the Kospi that we're heading into. We're seeing stock up about 2.5% for the shares there on the benchmark. And there you are, the new president meeting the crowds there, Dave.
Yeah. Talk about timing. Talk about timing. There we go.
It's like they planned it for us.
Well, we did.
Yeah, we did. We
will take credit. We will take credit for this. Timing it perfectly. In fact, as we watch the new president about to take his oath and office there, let's bring in Sherry An, our co-anchor, of course, who's been covering these elections for us out of Seoul. Sherry, what's top of mind for you as we look at these live pictures? And hopefully, I think the narrative was this would be the end to months of political turmoil there in South Korea. What's next, I guess?
Yeah, you can see President Lee Jae-Myung right now walking in with the new First Lady, Kim Hae-kyung as well. It's really interesting that this is being called an oath of office as well, not an inauguration event or a ceremony, because they simplified it. Of course, they don't have a transition period. They're taking office right away. Lee Jae-myung has now been president for about 4 hours or so. He took office at 6 a.m. this morning. We are expecting about, so you can see, 300 people or so attending the event at the National Assembly, not even in the main chamber of the National Assembly, but Rotunda Hall. This is where it happened for Moon Jae-in. Of course, we were kind of wondering what this oath of office would look like. But the thing with South Korea, we do have precedent, because in 2017, President Moon Jae-in took over impeached President Park Geun-hye. The event took about 25 minutes, and that was it. President Lee Jae-myung also expected to head directly to the presidential office in Yongsan to carry on with business. Of course, we know a lot of top priorities for him right now will be trade negotiations with the U.S. We heard from local media that perhaps he could be holding a conversation with President Trump later on Wednesday as well. We know that there are about 1,500 police officers dispatched during his first day in office as well. Of course, at the end of a very turbulent time for South Korea.
Yeah, Sherry, just tell us about, he's quite a divisive character, right? He lost the election a few years back. He faces multiple criminal charges, and he's seen now as the man to sort of reunite the country just months after months of divisiveness. I'm just wondering, how is he going to do that and essentially restore democracy in some ways as well?
Yeah, I mean, you said it. He is a political survivor, both in the figurative and literal sense of it. He actually survived an assassination attempt last year when he was stabbed in the neck. When it comes to his political career, you mentioned several scandals as well, ongoing trials as well for alleged bribery, charges related to a property development scandal as well. He comes from a very blue-collar route. He was raised in poverty. He was a factory worker just when he was 12 years old. He turned himself into a human rights lawyer, became the governor of Gyeonggi province surrounding Seoul. And now, after losing very narrowly to Yoon Suk-yeol back in 2022, he's finally become president of South Korea. You can see him right there in the live pictures with the new First Lady taking the stage. We know that his economic policies favor more left-leaning policies like state-led growth, fiscal expansion as well, often at times compared with Bernie Sanders because of his approach of wanting more wealth distribution, protection of labor rights as well. Although he's toned down a lot of that rhetoric during the presidential campaign, he has also been a little bit more open when it comes to the trade negotiations with the United States, but also he wants to be careful when striking a deal with Washington.
Well, I was going to ask you about that. We know somewhat of some of his domestic policies. What do we know about his foreign policy orientation?
He has said that he doesn't want to be unilaterally bound to America's interests, that he doesn't want to unnecessarily be hostile towards China and Russia as well. So this has made it sound like he could want friendlier relations with both China and Russia. Of course, we know that coming from the Democratic Party, he wants dialogue with Pyongyang. That could be more difficult given, of course, North Korea's ongoing relationship with Russia and its war with Ukraine, providing them missiles and munitions as well. But when it comes to the broader geopolitical picture, of course, the situation has changed around the Korean Peninsula, around trade relations as well, how economics and geopolitics have been interlinked in recent months. We heard from Secretary Marco Rubio already congratulating President Jae-Myung, saying that he wants to modernize the relationship with South Korea. Interestingly, Prime Minister Shigeru Ishiba of Japan was also one of the first people to come out and send him a congratulatory message saying that he wants to energize the relationship with South Korea. We know that this could also be a little bit tricky given the historical grievances that his Democratic Party holds against Tokyo. But this year, we also know that it's the 60th anniversary of course, the colonization of South Korea by Japan. So we'll be watching very closely how that cooperation and relationship with Japan unfolds, especially when it comes to a trilateral connection with the United States.
And Sherry, you mentioned about just the vote count and what really came in. And this is hardly a landslide victory for the new president. You take a look at the PPP party. I mean, they were still able to get more than 40% of the votes in some ways. What does that tell you about just how polarized South Korea still remains?
After 6 months of political turmoil, perhaps not surprising, but Yvonne, you said it. I mean, the expectation was for a landslide victory when the campaign got started 60 days ago. But then this turned more narrow as the months progressed. And the PPP, as you said, more than 40%. And even a minor party led by Lee Jun-seok also getting more than 8% of the votes. What that means is if you tally the conservative votes together, they could have potentially outweighed the votes going to President Lee Jae-Myung. We have seen that the president has a weaker support level from younger men in South Korea in their 20s and 30s when it comes to some of those gender policies that he wants to pursue. We know that there's a big generational gap in South Korea. We know that there's also a big economic gap. We are expecting the president to pursue more wealth distribution policies as well, more labor rights protections, more minority shareholder protections as well. We have seen, of course, that incredible rally in the South Korean equity markets, also the strengthening of the Korean won on expectations of what better corporate governance in South Korea could mean for the equity markets and valuations in general here in Seoul, where we are seeing, of course, a long-standing Korea discount.
Sherry, fantastic. Sherry on, our co-anchor there, covering the story for us. So we'll have more, by the way, on Korea's leadership and the new chapter ahead. Just ahead here in shows with the Center for Strategic and International Studies joining us at those times on your screen. Just to tell you, before we take a short break, Korean markets, Korean index, the Kospi is set to enter a bull market today. This is the China Show.
Taking you back to live pictures out of Seoul, where South Korea's Lee Jae-Myung is being sworn in as president in Seoul. As Sherry had mentioned, there is no transition period. He is now the president of the country. And the first sort of lines that we're hearing in this oath of office is he's trying to revive people's livelihoods and restore growth. That seems to be what he is prioritizing first day on the job. And he stands with a heavy sense of responsibility, just given half a year of political turmoil in this country, and he is going to be the guy that has been elected to really restore not just democracy, but really reunite the people and this country once again. So there you go. That is the latest. Of course, we've been talking about the Kospi, right? We're continue to see those gains of more than 2%. So investors are liking this, maybe political stability is back in Korea. Of course, the president himself has talked about doubling that level there to about 5,000 for the Kospi, and certainly a lot of, that could be a tall order, but certainly a lot hangs on what he can do for growth and really foreign relations, what sort of deal he can strike with President Trump, for example, as well.
Big one. That's a big one. Although, if history's any guide, it's usually a risky exercise for politicians to tie stock market targets.
They rarely do, right?
Yeah. Well, that's the thing. For us to get to 5,000, we're about 3-2 away.
Yeah.
2-3 away.
Yeah.
That's what? About double?
Yeah.
From
double.
current levels?
Yeah.
You'd have to stay. either get a 20% rally in the next 5 years, and then we get there, or he stays much, much longer in office. Or he doesn't need to be in office. Anyway, he hasn't given a timeline, of course, for that, to be more specific there. But to Yvonne's point, it is the best performing group of benchmarks in the Asia Pacific this quarter. Kospi, Kosdaq, and a Kospi 200. Let's bring in Willem Sels, Global Chief Investment Officer at HSBC Global Private Banking and Premier Wealth. Good morning and nice to see you.
Great to see you.
One of the 4 principles or pillars of this new report that you guys have come out with looking into the next few months is to tap into Asia's growth, domestic resilience and structural growth. Does that include Korea?
Well, Korea is actually not such a domestic market. It has more exposure to the U.S. than, for example, China, India, Singapore. And those are the 3 markets that we're overweight, China, India, Singapore. So China, for example, does, in terms of revenues, 2.3% is tied to U.S. goods, exports to the U.S. of goods from China. In the case of Korea, that's 12%. In the case of Japan, it's 18%, and Taiwan is even higher. So those are certainly not domestic markets. So it is important for Korea to strike a deal.
Can they ever get rid of that Korea discount? What would it take, do you think?
So I think a lot depends obviously as well on the technology side, and how people are going to get excited about the electronics, about semiconductors, and so on. I do think one of the other areas of the report is that we do think that the AI trade will start to reinvigorate people again. I think we just had one event so far here in Asia. I'm doing a tour, and people were quite excited about the AI trade again. So once you get a little bit of stabilization of that tariff story, of the bond story, which I'm sure we will talk about, then maybe AI comes back to reinvigorate market sentiment.
What's the best way to express this enthusiasm around AI that's, to your point, is seemingly back?
I think that you need to look at the entire ecosystem and not just focus on the semiconductors, because that's where you have the trade restrictions, that's where you have the competition, etc. I do think it goes more and more into the AI adoption. There were some interesting reports out by some consultancies, PwC, McKinsey, etc., who are showing that the adoption of AI by US companies is faster than the adoption of the internet and the adoption of the personal computer were at that time. And the very big reason for this is that it is very helpful in terms of automation, and not just automation of manufacturing, but very importantly, automation of services, because only 11% of the economy is manufacturing. So once you can, with generative AI, that makes all the difference for services. If you can automate, that really helps. And you've seen lots of companies, Microsoft and so on, announcing that they are actually laying off people, becoming more profitable and more productive because of that generative AI.
So you're still bullish on equities? How should we look at equity exposure now?
Yeah, so we are rebuilding our equity exposure, with overweights in the US and then in Asia. We had for a very brief period that overweight in Europe. That was in part because of US pessimism for a while. But also it has flipped because Europe is probably not taking full advantage of the opportunity here. The German coalition agreement was a little bit underwhelming in a certain way. Now, as we are also getting more optimistic again on the AI trade, that flips you back into the US. But that needs to be balanced with an Asia overweight, not just because people are actively looking for diversification, but also because Asia has that strength of some of the domestic economies, and also really that technological innovation, which is really impressive to see.
Is the overweight in the US more on AI, or do you also feel optimistic around the economy?
So on the economy, I do think that some people have been too pessimistic about it. People have been talking about a recession. They've been talking about stagflation. We are not in that camp. We have 1.9% economic growth. We think that the inflation that we expect, which is 2.9 this year, 3.1 next year, that is what the markets already price in. So I don't think that is going to create a sell-off. The earnings, more importantly, because you trade earnings rather than the economy. Yeah. The earnings in the first quarter had a good positive surprise, 6.1%. It was relatively broad-based. It was led by technology, hence the optimism there. But those solid earnings, the solid margins, it's mainly margin-driven, the solid balance sheet mean that the U.S. economy can undergo a shock before it goes into recession, which we don't think will happen.
What about for the bond market, right? The consensus is for more yield curve steepening. Is that almost too bearish on the growth outlook as well?
So we think that when you look at the valuations in the bond market, so you have that inflation, which is correctly priced in our view. Then you have the real yields, which is at multi-year highs already. You have the term premium, which compensates you for taking that duration exposure. That as well near multi-year highs. Yeah. So I do think that bonds play a role in portfolios, especially for those people who are worried about recession. But what we do is we diversify our diversifiers. Sorry for that phrase. But we also go into gold. We go into alternatives and so on. They all have different risk profiles. If you're worried about the debt pile, you don't go into bonds, but you go into gold. Yeah. If you're worried about your interest rate that the Fed is not going to cut, then you need floating rate. So infrastructure, for example, is an area that people really like at this point in time, and also has obviously a very predictable cash flow stream, which is really attractive.
Yeah, and I think that takes us into. That's a good point. It depends on the client, right? And for clients that are looking for income, so you mentioned infrastructure might provide the cash flow. Sometimes it could be down to what funds do I buy? Do I look at low duration? Do I go high quality bonds, for example? So if I'm picking between credit funds, effectively fixed income, what strategies do you think are best right now? Where's the risk reward right now?
So if you limit yourself to the fixed income space, because I've just tried to open it up to other asset classes, but if you limit yourself to the fixed income space, then I do think that where your compensation is the biggest is on the rate side, is not on the spread side.
Okay.
Your spreads. That being said, your spreads have been quite resilient, which was a good thing. Obviously, during the volatility, when you look at, for example, policy uncertainty, that spiked much more even than equity volatility, but equity volatility spiked more than spreads did. So spreads were were quite resilient, and that is to a large extent because I think overall, lots of the corporate balance sheets are healthy. But indeed, it is the case that when you look at valuations, credit spreads are not overly generous. So it's rather, taking a little bit of duration. If you can go with 7 years, for example, that gives you also that hedge against the growth risk, and then indeed complement it with other strategies.
How do you view the dollar then? I mean, it seems like it's been driven more about policy uncertainty than just rate differentials.
It's completely decoupled from the rate differentials, and so to some extent, again, there as well, there is a risk premium embedded. So on the equity side, your valuations have dropped to about the 10-year average if you do an equally weighted index. On the bond side, you have that term premium, that real yield, which is really high, and then on the US dollar side, you also have that gap with interest rates. So it seems that US assets already have a risk premium across the board. I do think that, given our optimism on the U.S. growth, I do think that you shouldn't expect too much further U.S. dollar weakness. That being said, all of our clients are looking at their FX exposure and looking at how can we diversify theirs as well, or do I do a particular hedge because I have a mortgage here and an asset there. That's obviously a very smart thing to do.
Willem, it's great to have you. Willem Sels there, Global Chief Investment Officer at HSBC Global Private Banking and Premier Wealth. We got plenty more ahead. This is Bloomberg. Well, U.S. Treasury Secretary Scott Bessent has taken aim at China's economic imbalances in a video speech to a conference in Switzerland, and that's where the U.S. and China hammered out a fragile trade truce last month. Let's bring in our chief North Asia correspondent, Stephen Ingles. We're still not hearing of a confirmed call just yet.
Okay, the call that's supposed to be happening, right? According to the White House spokesperson, Ms. Leavitt, says it's going to be happening soon, but we still don't know. They've said that in the past. So, again, I think the temperature has to be brought down a little bit more, and that can really only happen if the two sides are talking at the highest levels. So there's been some time that has passed since their trade truce that happened several weeks ago in Geneva. Now Scott Bessent speaking coincidentally to a conference being held in Zurich overnight, essentially latched on to some of the old tropes, essentially that the Chinese economy is imbalanced, needs to boost domestic spending, needs to stop exporting deflation and excess industrial capacity abroad, et cetera, et cetera. We've heard all these things. The reason why we're all kind of hanging on the possibility of a phone call is that distrust is mounting and is quite large, to the point where some say maybe insurmountable. Because, again, those reprieves on tariffs from the Trump administration will be potentially expiring next month. So there needs to be more high-level dialogue to get a direction on where to go from here. Again, the United States growing increasingly frustrated by the lack of progress on China relaxing those curbs or those rare earth export restrictions. And, of course, China is really slamming what they call discriminatory restrictions, new discriminatory restrictions on tech, as well as the potential revocation of Chinese student visas. So lots to go through.
It probably helps more than it doesn't that there is a new U.S. ambassador
We'll see.
In Beijing, and they met with Wang Yi, of course. And how did that meeting go?
So basically, David Perdue has to go and give his credentials to the Ministry of Foreign Affairs as the new ambassador. So we'll have to see. Wang Yi, the top diplomat in China, the foreign minister, he did say he hopes that David Perdue can help, improve relations between China and the United States, but also said they need to create necessary conditions for bilateral ties to get back on the right track. He says it's important and critical juncture of U.S.-China relations, and says Washington's recent negative measures hurt China's interests. The two, according to David Perdue, talked about trade, no doubt, and they also talked about the fentanyl issue.
Steve, thank you. Stephen Engel, our Chief North Asia correspondent there. Right, a couple of stocks that we're tracking here. We're starting things off with Chinese automakers, EVs in particular. So BYD up again for a second day. As you can see, we're now back above that 400 handle after we dipped into about the 380s, I believe. Geely Auto, XPeng, and also NIO, which did come out with earnings and also the plans to cut costs in R&D, and they effectively expect that to show up in earnings in the next few quarters or so. Right. The other one, of course, is Toyota Industries and Toyota Group, following the big news, of course, into, I believe, the close or after the close yesterday. So 12.5% down on Toyota Industries, and the other one, of course, is up 2% following, of course, that buyout that faced quite the, let's say, debacle over the price. Speaking of price, Samsung up about 1%.
Take you back to Seoul now, and the South Korea's new president, Lee Jae-Myung, is speaking after being sworn in, and he's talked about working to make a safer, peaceful country, to foster cultural industry, and also corporate development, respect for labor can coexist, and really talking now about North Korea. So he will prepare for a North Korea nuclear arms provocation. Certainly the foreign policy aspect has been quite big as well, and how he's going to be able to deal with President Trump, and of course ongoing trade negotiations between the U.S. and South Korea. And he mentioned about North Korea seek to establish peace on the Korean Peninsula.
Yep, a couple of lines there coming through as well. It's worth pointing out, I think it's interesting, as our co-anchor was pointing out, there is no transition period. He has already been president, even though he is giving his oath and his speech. He has been president already for about 3.5 or even 4 hours now, give or take there, after winning elections there, of course. Right, as far as markets go, so I think the market takeaway here is we're up 2.4%, so we are now up over 20% from the April low on the Kospi index, which effectively now puts us or sets us on track to enter a bull market towards the close. We are getting, of course, some strength in the currency, and also bond yields are actually to the upside as well. Right, a couple of sectors to track going into today. So you have financials, I believe chemicals are also leading these gains. Suffice to say, volumes are heavy. And apart from the four you see on your screens, every other sector is actually also seeing some decent gains, with the exception, I believe, of utilities, which is really a defensive play. But all that said, markets are cheering this one on and are liking this, I guess, in some ways, some more clarity after months of uncertainty.
Yeah, that was probably the one sticking point for many foreign investors to really come and dig their heels back into this market, right? Yeah. The political instability side of things. And hopefully, you know, as Lee has talked about, he wants the Kospi to double to 5,000 levels, right? So that's basically quite a tall order there. But certainly his kind of priorities in terms of helping the livelihood of people, also when it comes to a sort of trade deal he can strike with President Trump, certainly is going to be top of mind. Let's discuss the geopolitical implications of the Korean election result. Joining us now is Sydney Seiler, Korea Chair Senior Advisor at the Center for Strategic and International Studies. He joins us now from Washington. Sydney, it's great to have you on the program, and thanks for staying up late for us. You know, interesting. Maybe we'll start with that first line: seek to establish peace on the Korean Peninsula. You spent a whole career focusing on the peninsula, and certainly the discussions there. But what do you think he can do in terms of priorities when it comes to North Korea?
Well, I think candidate Lee and now President Lee has been very careful to articulate both the desire to engage the North, to try to pick up some of the pieces that fell apart with the end of the Moon Jae-in administration and that 5-year window in which the South really took a run at North Korea. North Korea for about a year was responsive and then eventually lost interest, as they traditionally do when they engage South Korea, because they're never really looking for a protracted improvement of relations, but rather short-term kind of gains to mitigate pressure, et cetera. And that language, though, of being open to dialogue, open to engagement, open to anything that could bring peace to the peninsula, while also making statements on the need for the U.S.-ROK alliance, the need for strong deterrence, the need even for trilateral cooperation with Japan, as the three countries work together, particularly against the North Korea missile threat. So I think President Lee already is showing a way forward that would seek to have that healthy mix of a strong deterrence and at the same time a willingness to engage. I also think, though, Lee is under no delusion that the stand down in dialogue between the two Koreas is somehow attributed primarily to its predecessor, President Yoon, but rather has been the result of policy choices in Pyongyang that for now it doesn't look like we're going to see much of a change from Kim Jong-un, I think, in this regard.
And is that because of the South, or is it because we're now under Donald Trump again?
I think the advancement of North Korea's nuclear program led to efforts in the 2018 to 2019 engagement, which included several summits with the Korean leader Moon Jae-in, South Korean leader Moon Jae-in, as well as the well-known summits in Singapore and Hanoi with President Trump. And that whole process was designed to move North Korea beyond denuclearization into an era when the world is accepted a nuclear North Korea as a fait accompli, is willing to engage with North Korea without the nuclear issue on the table, and is willing to drop sanctions and pressure. He did not succeed, Kim Jong-un, in achieving that. And the invitation is out there to any country who is willing to engage with him on his terms, respecting North Korea's sovereignty. And the number one candidate, of course, in this regard is Vladimir Putin in Russia. So with the relationship with Vladimir Putin now yielding such tangible benefits and intangible benefits, near-term profits and longer-term strategic possibilities, I asked myself the question, what would Kim Jong-un be looking for from South Korea, or even President Trump in the United States, that he isn't already getting from Russia? So for now, I'm not that optimistic that we're going to see a quick return to talks, in spite of the inclinations of Jae-Myung and President Trump, both overlapping in this regard.
And President Lee has overall been pretty skeptical about the U.S. and Korea alliance. And they're also talking about maybe possibly strengthening ties with China at a time when there's a lot of anti-China sentiment in the country. Do you think this is going to cause more friction between D.C. and Seoul?
Potentially, but I would urge a wait-and-see attitude in terms of some of the efforts by President Lee to modify his posture, to kind of shift in a way that is more positively speaking of the alliance and more skeptically speaking of North Korea and China. I think President Lee's got the unique experience of being the governor of the large, not only the largest province in South Korea, Gyeonggi-do, but the one with a large number of U.S. troops present. He is well aware of the national security issues. He's aware of the North Korea threat. He's got some advisors telling him, yes, the bad relationship on the peninsula is all due to an aggressive, hegemonic United States with language that rings almost like something coming out of Beijing or Pyongyang propaganda. But so far, he's been able to moderate his statements on the alliance, creating an opening for our two sides, the United States and ROK, to have a good dialogue charting the way forward.
Sydney, what about domestic issues and whether we're, I don't know, let us know if we're ignoring or overlooking any important shifts within sort of domestic political trends, things like low birth rates, concerns around the economy. What do you need to be paying attention to here as far as his priorities are concerned now?
His comments during the campaign appealed to a wide audience, acknowledging, for example, the importance of chaebols, not only in past history of Korean development, but going forward, how does South Korea navigate these extremely difficult trade waters, economic waters that are, global in dimension? What can one person, one leader do about it? It's a big challenge. And at the same time, he comes from a history of working class. He did not go through a traditional high school and college. He served as a worker, a human rights lawyer, and he's got his heart aligned with those who he otherwise think are the marginalized or the have-nots. And of course, the challenge will be in terms of building some economic forward momentum centered around the Chaebol, while at the time addressing these rich-poor gap demographic issues. They're easy to name off. They're hard to solve. I would look at, and I'm sure, in particular, the markets will be looking at this relationship between the Chaebol and Lee-Myung-bak. That'll be interesting to see what direction he takes it early on.
You mentioned about there's optimism that the country can move beyond martial law and what happened 6 months ago, but you're saying there's still a lot of things that haven't changed. What exactly hasn't changed, Sydney?
Well, first of all, if you bring up a map, I hate to drop this on you because I know you don't have the graphic, but a good graphic in the color showing what areas went to the progressives and what areas went to the conservatives. It could have been a map from 20 years ago. Progressives still do well in the south west part of the country, going back to Kim Dae-jung, who came from Chola province. The cities, the urban areas of Seoul and the surrounding areas. And then you look on the right side, toward the east, it's all conservatives. So you still have regionalism playing a big role in terms of Korean politics. And I think we also have to remember that, well, Lee himself walked away with 49.42% of the vote. His opponents together had about 49.49. Now, everybody's right. Clear that if the runner-up had not, if the third runner-up had joined with the runner-up, that it didn't necessarily mean they would have had a majority. But it's important to remember that nearly half of the Korean voters still felt comfortable associating themselves with the conservatives and the martial law. They didn't support martial law, but they did not find martial law was sufficient reason enough to vote with the progressives. And that, to me, shows that going forward, we'll still have these political divides, and how Lee is able to bring them together while resisting the temptation to build a legitimacy solely upon restoring democracy and punishing those responsible. South Korea has a long history of retributive politics, which would be extremely harmful if President Lee moves down that path.
Sydney, thank you so much. That was fantastic, really. We covered, I think, just about everything. Sydney Seiler, the Korea Chair, Senior Advisor at the Center for Strategic and International Studies. Speaking of South Korea, that market is continuing to rally. There's a broader tech theme that's emerged, really, today here in the Asia Pacific. So we talked about Korea, Taiwan. TSMC is up substantially. So, in fact, on the other side of this break, we'll tell you what's going on there, plus this really big tech focus we have in the coming segment. Stay tuned. This is The China Show. Right, welcome back. We're continuing to track the market reaction to perhaps what's taking place. It's also worth pointing out with this next headline that I think there was a 30-year bond sale in Korea of note. So the fourth ticker at the bottom of your graphic on your screens right now, that's a 10-year bond future. And as you can see, we're now trading below 118. So at one point, in fact, we were down over 100 ticks. So let's call it 99 right now on the screens, which I think is effectively there. So yeah, we are getting a decline across the bonds market. So yields are effectively pushing higher more than usual at this point.
Yeah, so it's out of bonds back into risk like stocks.
Yeah.
The won is also continuing to strengthen here. So we're appreciating about a third of 1%. So certainly there is much more optimism around this market, of course, after this election. Another stock we're watching is TSMC. We mentioned about what we heard from U.S. stocks overnight. NVIDIA was up some 3%. Samsung's also up this morning in Korea.
Look at that.
Look at Taiwan Semi. We're up 3.5% here right now. This is also on the back of what we saw yesterday, right, with that annual shareholders meeting where they did talk about record profits that they're forecasting for this year on soaring AI demand. So certainly that stock continues to fly in Taipei this morning. Now, after years of U.S. companies like Boston Dynamics and Elon Musk's Tesla leading the development of humanoid robots, Chinese startups are now making rapid advancements using AI. Bloomberg's Animal Jewelers has more on the technology and its global impact.
It's not your average dance class. This video is from a Chinese robotics startup called EngineAI. Watch the humanoid mimic the instructor. Nice. The company says no AI generation or CGI was used in the making of this video, and that this robot could replicate the steps from the film Kung Fu Hustle within days. We saw similar moves in February during the annual Spring Festival Gala. Humanoid capabilities are expanding fast, from backflips to front flips. And now this from Unitree's G1, a side flip that most actual people could not perform. But these androids are about to do more than just entertain. At least in China, already there's video that shows humanoids training with local police in Shenzhen, working on factory floors, and teaching children in Sichuan province. China is quickly integrating humanoids into myriad commercial trials and use cases. This pace of development is not lost on the West.
Every technological aspect is now considered through the prism of national security. So I think governments around the world are racing towards this kind of more autonomous development of technological capabilities. And I think that the Chinese, in a way, have really gotten a head start.
Of the 10,000 humanoids set to be manufactured globally this year, more than half are expected to come from China. It's another sign of the country's leadership in the industry that Citibank estimates could be worth $7 trillion worldwide by 2050. For Washington, it also illustrates why measures to curb China's technological ascent may not work.
I mean, I think you're going to have different tech stacks moving forward. I think you're going to have different standards. And I'm not sure that Western standards are going to be the ones that proliferate around the world.
While the US has formidable players in robotics, including Tesla and Agility, even Elon Musk is worried about falling behind, despite voicing confidence in his Optimus device.
With respect to humanoid robots, I don't think there's any company in any country that can match Tesla. I'm a little concerned that on the leaderboard, ranks 2 through 10 will be Chinese companies.
A race between humanoids and humans in Beijing in April showed this new technology still has a way to go. Only 6 of the 21 robots competing made it to the finish line intact and within the time limit. Yet China is sticking with ambitions to dominate the industry worldwide, especially as the costs of machines come down and as working populations age. China has earmarked nearly $140 billion for robotics and high-tech in the next 2 decades, far more than the US and Europe, to take humanoids from what's been seen as a novelty idea into the real world. Annabelle Drewlers, Bloomberg News, Hong Kong.
Yo, man, they got more moves than me. They could hip-hop dance and pop and lock. I love it.
And here we are laughing about it. And we're laughing about, these are probably what's going to spell the end of us, right? So it's almost like we're laughing at the
You can't run marathons, though, it seemed like. Huh? You can't really run marathons, though, we saw that.
No, okay. Not that that's a thing. But anyway, okay, I think I'm dating a humanoid robot from now on. None of the emotional baggage and drama.
Okay, yeah.
Anyway, let's leave it there. I'm opening up a can of worms here. One of the startups, in fact, featured there is aiming for unicorn status here. $1 billion valuation when it completes funding round, of course, this year. And Bell, of course, who was the voice behind that graphic you had there, exclusively had a conversation with EngineAI, the co-founder there, about their plans to bring humanoid robots into households.
We are currently working on the robot's motion control, which are somewhat similar to the human cerebellum, enabling unconscious motor abilities. These capabilities are gradually developed and unlocked. You mentioned a specific detail, the dexterous hand, but in real-world tasks, we know that its degrees of freedom may not need to match the flexibility of a human hand. Not all 5 fingers are needed for certain tasks, like carrying things or doing spot inspections. For certain industrial tasks, a robotic hand with only 3 fingers or reduced degrees of freedom can be sufficient to meet the task requirements.
What's the goal, though? Is it really to be able to replicate something like a human hand?
The ultimate goal of EngineAI is to bring humanoid robots into households for domestic services. This represents a massive market opportunity. To achieve that, we aim to make the robot as biomimetric as possible. The more human-like, the better. When it comes to the dexterity of the robot hands, we are not strictly pursuing a specific number of degrees of freedom. Instead, we take a holistic view of the robot's overall performance, including factors such as load capacity, lifespan, impact resistance, etc.
What's your plan for marketization? Where are you planning to send these robots? What new markets are you looking at?
Of course, we are very open and eager to build connections and business collaborations with partners from all over the world. We are not limited to selling our robots only to Chinese households. We are also seeking to bring humanoid robots to other big markets like the US.
Let's talk as well about the production capabilities of EngineAI. How many humanoids are you planning to produce this year, but what's also your outlook into 2026, 2027?
We expect to produce and deliver nearly 1,000 humanoid robots this year. By next year, the number will grow to several thousand units. We aim to reach an annual delivery volume of over 10,000 robots within the next 4 years.
What's your plan then for fundraising? Do you need to raise capital to continue to do this research?
It will be a long journey to bring humanoid robots into households. We aim to raise 1 billion yuan in the current round of fundraising.
Do you have any concerns about rising tensions between the US and China and countries maybe being forced to pick a side? For instance, South Korea, it's a country that has a good relationship with Washington.
China and the US have their own strengths. China has advantages on its supply chain system, while the US leads its AI modeling capabilities. We believe that neither side can be missing. We must collaborate to drive the development of this industry.
Fascinating stuff. EngineAI co-founder Guowen, they're speaking to Bell. Yeah, I need a few of those humanoids at home to help out with my household. Something else I might need in my household, a Nintendo Switch 2, right?
If you could get one.
If we can get one. Those consoles are set to hit stores worldwide on Thursday. Now, Bloomberg Intelligence sees a new device positioning the company for a major comeback after 4 straight years of lackluster momentum.
Yeah, and the launch is certainly the subject as well of the latest Big Take Asia podcast, and Yvonne, of course, the host of the podcast, is here with us to tell us more about how long we've waited for this and will it live up to the hype?
That's a good question. My 15-year-old at home is hoping so. Like, he's got a Switch, but we haven't touched it in like months and months, right? Yeah. So far, what we're hearing is that, Nintendo wants to deliver what gamers know and love. It's still a hybrid system. You can play it on the go with a controller. You can dock it to your TV. It's got a big, snazzy screen that has better resolution. There's better computer chips powering it so that you should have video graphics that will really pop out. And it's got this controller that's detachable. So acts just like a mouse. You can use it for shooter and aiming games. Of course, all of that comes with a huge price tag. $450 in the US and most other markets. You get a little bit of a discount if you're in Japan. The games themselves are also expensive. $80 for Mario Kart World and Zelda, so my son's going to have to save up.
It's a premium product for sure. Yeah, you're not paying for it, right?
No, I'm not.
They rely so much on this one product, though, Nintendo, for their success.
Exactly.
How important is it?
And it's such a unique and interesting strategy that is very different from other competitors, right? Like you said, they put all their eggs into one device, and it really needs to be a runaway hit. We, of course, saw that with the current Switch. They've sold more than 150 million units, so that's a big hit. They want to replicate that success. And interestingly, what they're doing this time is slightly different. They're not going to completely make a radically different device. They're going to give people what they know and love and really improve upon that. So the question is that enough? After 8 years, is that enough of a reason for people to upgrade? Is it fresh enough, new enough for people to upgrade and
I want
spend
one,
money?
Yvonne.
Yeah, I was just telling you guys, break, my buttons on my Switch are melting already. It's been a while since I played it.
Well,
I think
you're going to have to wait a lot longer.
How hard is it to get one?
Pre-order sales are already sold out.
Oh, no.
Retailers will have a limited quantity to sell. But already we're seeing signs of what's to come, probably long lines out the doors. Someone posted on X overnight a billboard that the retailers will be displaying. It's got sleek photos of the new Switch 2.
Oh, man.
And it reads, out of stock.
So worst words heard from a gamer.
Yeah.
I really want to play Mario Kart, though, the new one. And you have to get the new Switch to play it. So.
Yeah, well, we'll have to wait.
Wait and save up.
Yeah. Are they subject to tariffs? Do we know?
Well, I mean, not right now. I mean, obviously, there's a reprieve.
Yeah.
Most of that, of course, is made in China and Vietnam. And so the question is, will that be hit once that comes?
Okay, well, hopefully not. It's $450 already. A steep price. Fantastic there. Of course, that's the topic of today's Big Tick. And again, all roads lead back to tariffs, don't they, on this program. So I'll leave with that thought before we end the show today, and maybe a look at, of course, the other big story today, which is South Korea, and that market is poised to enter a bull market.
Yeah, certainly a lot of optimism, a lot of hope after this election, and the new President Lee to deliver some growth and reunite this country. Cost will be up 2.5%. That's it for us here in the China Show.